Okay, back again. Here we are. So, in the last video, we talked about some rules for investing and how to get started, basically. And in this video, we're going to be talking about some of the habits of successful investors. These are things that I've employed myself and, have found success with. So, I feel confident in bringing this info to all of you as well. And I also did my research, reading up on different articles, books, and other YouTubers just to get a little bit more information to provide you the most useful content possible. So yeah, these are three of the, at least what I've seen, best habits for success with investing to have. But before we get started, I ask that you go ahead and either drop a like on the video, subscribe, all that stuff. I'm not going to talk too much about it. It just really helps me grow and push this video out to more people. So go ahead and try that. Give it a shot for me. Anyways, though, let's just get into it. And the very first thing that every successful investor has is that they are always investing. It's all about consistency, always getting money into the market, whatever way you can. And the big thing with that is just making sure to automate investing. Automation is one of the easiest ways that you can ensure that you are always getting money into the market, whether it's every week, 2 weeks, month, whenever you get paid or anything like that. So with me, I get paid every 2 weeks from my 9-to-5 job, and I have automated my investing so that even before I get a chance to touch that money, a portion of it gets put right into the market, into my portfolio. So, that's my consistency with me. I also have a separate account that I have devoted to post-tax money that I, once again, put right into the market right away before I get a chance to do anything with that money. So, yeah, always being consistent with investing is probably the most successful habit, or the best habit for successful investors and investing. So the next habit of successful investors is diversification. Now, this is something that I'm sure your parents have probably told you about, or the thing that all of the analysts always talk about. The best way to build wealth is diversify, or to maintain wealth is diversify. That's exactly what you should do. And basically what that means is just not having all of your money in one place. It's really all it comes down to. It's just making sure that you're putting your cash and assets in basically every class possible. So, like, for example, me, like, I could put all of my money into Walmart stock, for example. And like, Walmart is one of those blue chip stocks. They're not going anywhere anytime soon. They're always working to, get more and more profits for their investors. And, that's good. But what that does is it directly links my net worth, my wealth, to the success of Walmart. And that's not okay. You shouldn't be doing that unless you're the CEO of Walmart, in which case, like, yeah, of course your success is tied to the, performance of Walmart and the business that you run. But what this basically means for the retail investor, or like the little guy, me and you, is that you shouldn't put all your money into one spot. And the different classes of places you could be putting your money is individual stocks, real estate, utilities. Just basically splitting up your money all over the place so that it's not all dependent on one asset class for success. Now, one of the best things that you can do to automatically diversify without having to think about, splitting them up and buying individual stocks and doing things like that, is to just invest your money into broad index funds. The best one by far that everyone always talks about and uses as an example is the S&P 500. So, SPY or VOO, it is 500 large cap stocks based in the US. There are certain requirements that mean that those companies can be part of the S&P 500. One of the most recent ones we brought in is Tesla, and obviously Tesla's been doing pretty well for itself. So if there are underperforming assets in the S&P 500, eventually they will get kicked out. So what this does is it basically, creates automatic diversification for your portfolio. So if you were to put all of your money into an S&P 500 index fund, there you go. That's automatic diversification for you because it covers a bunch of stuff. The largest holding of which is technology. So those are all doing super well within the last decade or so, and they most likely will continue to do really well also. So you should see some pretty good growth out of that in the long term. So there's some automatic diversification for you. Just throw it all into an S&P 500 index fund. Of course, do more research, do your own, looking up of things. So don't take it all from me. So make sure that you're doing a bit more reading up of places you could be putting your money. But let's not get too much into it. Let's just jump right into the next and 3 of 3 habits of successful investing. And that would be to keep your emotions in check, or leave the emotions at the door, because there is absolutely no room for emotions in investing. If you're the type of person that is pretty sensitive about your money, or you're worried about losing money, and investing is just not something that you are really concerning yourself with, just remember that in the long term, it's almost impossible to lose money in the stock market, unless there is some sort of catastrophe that occurs that plummets the stock market. And obviously, the most recent example of this being the coronavirus, that has been really shaking the world the last year. We had a 40% drop in the stock market when that occurred, or when all the lockdowns started back in March of 2020. But look what happened after that. It was the shortest bear market in history, and we saw some enormous growth. So basically, anyone that put their money into the stock market in the last year, there's no way they could have lost money on that. So keep that in mind, that even though there might be times where we lose 5% on a bad day, it's almost impossible to lose money long term as long as you're keeping that money in there. And those are just sort of things to remember if you're the type of person that is really concerned about the money going into the market and making sure that you're not losing money. You don't lose money until you go to take that money out. You never lose money unless you decide that you're ready to sell those assets and you're done and you pull that money out, in which case you are kind of confirming those realized losses. So yeah, those are 3 habits of successful investors. It's consistently investing in a diverse portfolio with those emotions in check. That's really all you need to do to be a successful investor. Those are the habits you need to entail. And of course, I'm going to throw a bonus one in there, and this one is also part of that kind of of course, this is probably something you've heard if you've done any research at all about habits of successful investing, and that is, if you're not investing, what are you doing? You gotta start investing. It's so important to start as early as you possibly can, even if you only have a few bucks to throw into the market, because you don't have that much discretionary money to use, and all of your cash is going to certain things that they need to be addressed, and investing is something that isn't necessarily the priority at the moment. It's so important to establish these habits that I've already talked about as early as you possibly can, so that you can take advantage of compound interest and money that grows over time. And real basic way of saying, if you don't know what compound interest is, it's money that earns you money, that in turn earns you money. So the quicker you can get investing, and the younger you are that you can start investing, the longer you have that money in the market for it to grow, and eventually, getting you even more money down the road. So those are, some successful habits of, I keep saying successful habits. Those are some habits of successful investors. And thanks for watching all the way through. Please like and keep the conversation going in the comments. Subscribe to this channel to help me, stay motivated to keep making videos and bring more content to you guys. And thank you so much.